Each of these institutions are using a sneaky trick to invest in the market every single day. What if you knew where these institutions had a high probability of entering and exiting the market? That would be pretty cool, right?
God damn!
Hello and welcome to our YouTube channel. Today I'm going to explore with you guys exactly how economic indicators, news, and events impact currency prices, and also will explain how traders can use fundamental analysis to make informed decisions. So make sure to watch the video till the end for an exciting surprise. A free gift awaits you. But before we jump in, don't forget to hit that subscribe button and ring the notification bell to stay updated on all our insightful content. Explain how traders can use fundamental analysis to make informed decisions. In the ever-evolving landscape of Forex trading, the ability to make informed decisions is a cornerstone of success. Traders who master the art of fundamental analysis gain a strategic advantage, navigating the markets with confidence and precision. We understand the significance of this skill, and in this comprehensive guide, we will unravel how traders can leverage fundamental analysis to make decisions that can potentially shape their financial future. What is fundamental analysis? Fundamental analysis involves evaluating the intrinsic value of a financial instrument, such as a currency pair, by examining various economic, financial, and geopolitical factors that may impact its value. Unlike technical analysis, which focuses on historical price movements, fundamental analysis provides a broader perspective by considering external forces that influence the market.
This sucks.
Explore how economic indicators, news, and events impact currency prices. In the intricate realm of Forex trading, economic indicators play a pivotal role in shaping market dynamics and influencing currency values. We recognize the significance of unraveling the complexities surrounding economic indicators. In this comprehensive guide, we will delve into the world of economic indicators, providing you with the insights needed to navigate the Forex markets with precision. What are economic indicators? Economic indicators are statistical metrics used to assess various aspects of a country's economic performance. These indicators provide traders with valuable insights into the health of an economy, helping them make informed decisions about currency movements in the Forex market. Key economic indicators in Forex trading: gross domestic product, GDP, a cornerstone of economic analysis. GDP measures the total value of all goods and services produced within a country's borders. A growing GDP often signifies economic strength, potentially strengthening the country's currency. Consumer Price Index, CPI. CPI measures changes in the prices of a basket of consumer goods and services over time. It is a crucial indicator for assessing inflationary pressures, which can impact a currency's value. Unemployment rate. The unemployment rate reflects the percentage of the labor force that is unemployed and actively seeking employment. High unemployment rates may signal economic challenges, affecting currency values. Trade balance. The trade balance represents the difference between a country's exports and imports. A trade surplus, exports greater than imports, can contribute to currency appreciation, while a trade deficit may lead to depreciation. Navigating Forex markets with economic indicators. Interpreting economic indicator releases. Traders keen on mastering the art of Forex trading must stay attuned to scheduled releases of economic indicators. Timely access to these reports allows traders to make swift decisions based on the latest economic data. Economic calendars, readily available on financial websites, are invaluable tools for tracking these releases. Using economic indicators for market analysis, anticipating currency movements, analyzing GDP growth, inflation rates, and employment figures enables traders to anticipate potential shifts in currency values. Risk management. Economic indicators provide valuable insights for effective risk management. Understanding economic conditions helps traders implement risk mitigation strategies, aligning with central bank policies. Knowledge of economic indicators allows traders to align their strategies with central bank policies, especially interest rate decisions, providing a competitive edge in the Forex market. The role of technology in analyzing economic indicators. In the digital age, traders can leverage advanced technologies to streamline the analysis of economic indicators. Automated trading algorithms, data analytics tools, and real-time market data enable traders to make data-driven decisions promptly. Applying fundamental analysis for informed decision-making, building a foundation of knowledge. To effectively use fundamental analysis, traders must build a strong foundation of knowledge. Regularly checking economic calendars, staying informed about central bank decisions, and following global news are essential practices. Analyzing economic indicators, GDP growth. A growing GDP often indicates a robust economy, potentially strengthening the country's currency. Inflation rates. Traders assess inflation rates to anticipate changes in currency values. High inflation may lead to currency depreciation. Unemployment rates. High unemployment rates may signal economic challenges, affecting currency values negatively. Interpreting central bank policies. Understanding the decisions and statements of central banks is crucial. Traders align their strategies with central bank policies, especially regarding interest rates, to stay ahead in the Forex market. Monitoring geopolitical events. Political stability. Stable political environments generally contribute to a strong currency. Events like elections or geopolitical tensions can impact currency values. Global developments. Traders must stay informed about global developments, as events in one part of the world can have cascading effects on currency values. Considering market sentiment and news. Analyzing market sentiment helps traders understand how the market perceives certain events. Reacting to news events and understanding sentiment can be critical in making timely decisions. Pitfalls to avoid in fundamental analysis. Neglecting risk management. While fundamental analysis is powerful, neglecting risk management can lead to significant losses. Traders should set stop-loss orders and diversify their portfolios. Ignoring technical analysis. Fundamental and technical analysis complement each other. Ignoring technical analysis may result in missed opportunities. Combining both approaches provides a more comprehensive view of market conditions. Conclusion: empowering traders for success. In conclusion, fundamental analysis is a potent tool for traders seeking to make informed decisions in the Forex market. At Tradiso, we empower traders with the knowledge and insights needed to navigate the complexities of fundamental analysis, paving the way for success in the dynamic world of Forex trading. For those who stayed and watched the entire video, drop a comment with the word "free" below, and our special gift will be sent your way. That was all for today's video. You can share with us your views in the comment section, and if you are new to the channel, remember to subscribe to the channel and hit the bell icon so you won't miss any future videos we upload. Thank you for watching the video. Best of luck and goodbye.